Welcome to The Swing, the official newsletter of the Forex Trade Room. Volume 2, January 12, 2024. The US dollar index has remained steady at 102.3 amidst various economic reports. Key inflation data showed an unexpected dip in the producer price index in December, with a yearly rise slower than anticipated. Consumer price index figures, however, exceeded expectations, leading to mixed opinions among Federal Reserve officials on future rate cuts. This contrasting data keeps the financial markets in anticipation of the Federal Reserve's next move. The Australian dollar has seen a rise to 67 cents, even as recent data indicates a slowdown in inflation. November's consumer price index showed a year-on-year increase of 4.3%, less than expected, suggesting easing inflationary pressures. This trend aligns with the market's view that the Reserve Bank of Australia might hold off on further rate hikes. While expectations for a rate reduction in May have diminished, Australia's expanding trade surplus provides a positive economic signal. The Canadian dollar has seen a resurgence to $1.33 per US dollar, countering its recent low. This recovery stems from the US dollar's dip due to disappointing service sector data, despite strong payroll figures. Meanwhile, in Canada, mixed signals from the job market and economic indicators keep the Bank of Canada's next steps in focus. The Japanese yen is holding steady at around 145 per dollar as market participants await upcoming domestic inflation data, which will be crucial for the Bank of Japan's monetary policy direction. Recently, the BOJ has tempered expectations of an immediate interest rate hike, stating the need for inflation growth to be sustainable and wage-backed. Japan's current account surplus for November also came in lower than expected. Meanwhile, recent U.S. data showing a 3.4% annual and 0.3% monthly rise in consumer prices for December has impacted the yen, bringing it close to one-month lows as it adjusts to the changing expectations around the Federal Reserve's rate cut plans. The New Zealand dollar is experiencing a rebound, currently around 62.5 cents, influenced by the weakening US dollar as market expectations lean towards multiple rate cuts by the Federal Reserve this year. The likelihood of a rate cut in March by the Fed is now seen as around 70%, a decrease from the previously anticipated 90%. In New Zealand, the market is anticipating 4 rate cuts from the RBNZ in 2024, with the first possibly arriving as early as May. This shift in expectations follows the RBNZ's recent recognition of the country's weaker-than-expected economic growth, suggesting a potential earlier adjustment to the cash rate. Back in November, the RBNZ maintained the cash rate at 5.5%, narrowly avoiding an increase. The Swiss franc continues to showcase strength in early 2024, hovering near a 12-year high of 0.85 per USD. This stability is backed by the Swiss National Bank's support and anticipation of its prolonged hawkish monetary policy. December's inflation data revealed a higher-than-expected rise to 1.7%, aligning with inflation trends in the Eurozone and supporting potential higher interest rates by the SNB to curb import inflation. In contrast, the market is leaning towards quicker rate cuts from the U.S. Federal Reserve, differing from the SNB's approach. Additionally, the SNB has actively reduced its foreign exchange reserves, reaching a 7-year low, further impacting the franc's valuation. The British pound is maintaining its strength, staying above 127.5 amidst various economic indicators. Recent data shows Britain's economy grew by 0.3% in November, slightly outperforming expectations with the help of the service sector. However, there's concern about a potential recession, as the economy shrank by 0.2% over the past 3 months. Bank of England Governor Andrew Bailey recently reassured that the UK economy is holding up well, despite increased borrowing costs, and highlighted the relative stability of mortgage holders compared to the financial crisis period. In other news, expectations for a March rate cut by the US Federal Reserve have diminished, given persistent inflationary pressures and a tight labor market. The euro is holding its ground above 109 amidst ongoing developments. Investors are carefully considering recent statements from ECB officials. Key takeaways include ECB President Lagarde's optimism about overcoming the toughest inflation challenges and her openness to rate cuts if inflation reaches 2%. Meanwhile, ECB Vice President Guindos warns of a possible technical recession later this year, with a pause in inflation reduction expected in early 2024. In response to the hotter-than-expected U.S. inflation data, expectations for quick Fed rate cuts have decreased. Bank of France Governor Villeroy de Galhau further supports the likelihood of ECB rate cuts this year, provided inflation aligns with their target. The Mexican peso is showing strength, nearing its best level in 4 months, largely due to recent economic data. December's inflation rate went up unexpectedly, potentially causing Banxico to hold off on reducing interest rates. This decision aligns with the World Bank's optimistic revision of Mexico's growth forecast for 2024. Consequently, the Bank of Mexico might keep its policy rate at the current high level to continue its battle against rising inflation. WTI crude futures saw an over 1% increase, ending at $72.68 per barrel. This rise is attributed to escalating tensions in Yemen, with US and UK strikes on Houthi targets following Houthi attacks on shipping. These events have heightened concerns about potential supply disruptions and affected global shipping routes, leading to increased freight rates. Consequently, crude oil prices have been on an upward trajectory, marking significant gains over the past 2 weeks. Gold prices soared past $2,050 an ounce, reacting to surprising U.S. inflation data showing a lower-than-expected producer price rise, which led to increased speculation about the Federal Reserve's potential easing of monetary policies. Additionally, the ongoing Middle East tensions have furthered gold's appeal as a safe haven asset. The MEL is looking to conclude the week with a modest gain of 0.4%. The Dow Jones dipped 115 points, with the S&P 500 and Nasdaq showing minimal changes. This mixed market response was influenced by corporate earnings reports and softer PPI data. While Bank of America and Wells Fargo's stocks declined due to earnings falling short, JP Morgan's shares slightly dropped despite favorable results. Delta Airlines experienced a significant 9% drop following a cut in its earnings forecast. Tesla also saw a decline due to a production halt in Berlin, while Citigroup's stock rose after announcing workforce reductions. Over the week, the S&P 500, Nasdaq, and Dow witnessed gains, as Wall Street gears up for a Monday closure in observance of the Martin Luther King Jr. holiday. Let's take a look at the week ahead for January 15, 2024. This upcoming week, keep an eye on U.S. retail sales and industrial production, remaining steady with subtle growth. Consumer sentiment might show a slight decline. Housing sector data will be in the spotlight, along with key financial reports from major corporations. Note the U.S. market closure on Martin Luther King Day. In the UK, watch for a potential decrease in inflation and retail sales, alongside an uptick in unemployment. Europe's focus is on the ECB meeting and Germany's economic performance. In Asia, China's GDP and economic indicators will provide insights into their growth challenges. Japan's economic data will be crucial for market trends. That's a quick roundup for the week. Stay tuned for in-depth analysis and updates from the Forex trade room. Good luck this week.